What's good, everybody? Hope everybody having a decent night. It's been a wild ride in the market. Been making a lot of videos. I haven't really just posted them because I don't get a lot of traction. But in any case, man, definitely want to go and talk about everything that's going on. We saw the mass manipulation yesterday, Wednesday, April 9th. Yeah, April 9th. So, long story short, right? If you didn't catch it, Trump has sent out a tweet early in the morning saying now's a good time to buy, right? And then put his stock ticker on the same tweet. Then he tweeted a couple hours later, stay calm, be cool, right? And I'm a day trader, so I'm watching the market all day looking to see where I can go and make plays. I had made a short maybe about an hour and a half prior to the shit spiking like this, right? And the market wasn't reacting the way I figured it would off the news with China. So knowing that, I decided to go long on a couple of positions, but I liquidated after I got a couple of dollars because I just didn't see him really. Again, it was the market wasn't reacting the way it should off China, but it also wasn't spiking up or anything like that, right? And if you know anything about day trading as of right now, Trump is kind of the indicator, right? So as soon as they start to talk, as soon as press releases or news is released, a lot of times the market's just waiting for the speech, and it can go up or down, right? So long story short, where I felt like this was big manipulation was while I was watching the chart, all of a sudden it started spiking, right? I'm watching the SPY, and it's spiking out of nowhere. So immediately I go to Yahoo Finance looking for anything. There's nothing there. It's only talking about tariff talk and the retaliations, right? So then I run to the TV and I'm listening to CNBC. The analysts are just as confused as I am. And the only news report that they got that was Scott Bessent was called back to the White House prior to addressing the press, right? So then you come out and prior to Scott releasing any kind of news, Trump basically releases a tweet that says he's putting a pause on all tariffs for 90 days, right? And mind you, before all this, again, the stock was already spiking. So who knew about the news? How could you go ahead and start investing at these points where it was not even breaking a level yet, and it starts to go ahead and start to break a level and go mass buying, right? Which would be Wall Street, because there's only a particular sector that can move the market that much, right? Retail and traders like you and I can't do that. Doesn't matter if you have 100 contracts. Doesn't matter if you have 1,000 contracts, right? You need at least motherfucking 20, 30,000, 50,000, whatever the fuck, 100,000 contracts that they're playing with. So when I saw that, I was pissed. I was mad as a motherfucker because the people are talking shit on TV, right? The secretary lady's talking about, you guys were all saying that they're going to cozy up to China. No, they need our markets. This was all our plan. And we're all sitting there thinking, this is your plan. What was your plan? What was your plan? You were just telling us on Monday that it was fake news when they said there was a hold on tariffs, and it spiked the first time, right? And then you basically liquidated everybody. So did you give everybody at Wall Street a chance to go and see, let's see if there's some buyers here, and then basically say, you know what, let's go ahead and put up the news. This is a good time to go and make everybody rich and make sure my donors get right because I know they're getting pissed off. And you see the video of Trump basically congratulating the Charles Schwab guy about making $2.some-odd billion, right? So another friend made another $2.some-odd billion. How's that not insider trading, right? Yeah, he could dumb it down and say, I put out the tweet, so anybody and everybody could have got that out, right? But again, before you put out the tweet, a lot of us are watching the market. Day traders watch the market every day. And for the shit to start spiking like it was and the volume to start going up and matching the price action like that, it didn't really make any sense as to why it would spike up like that. And then all of a sudden you release the news and then it keeps going parabolic and never stops, right? See, what I believe is that the investors, whoever was in that circle or whatnot, that knew was going to go and drop the tweet, they were able to go and get into the lows, right? See how the reaction was going to be at these levels. Of course, it starts to spike. Some of them may have took profits yesterday, right? Some of them probably shot up this morning to see what would happen, and then probably took profits once they saw the reaction of China and everything that was going on. But here's the other side of things, right? Now, it wasn't enough for the billionaires here that invested in Trump. It wasn't enough for the people that voted for Trump, for the retirees that he's supposedly so much about, losing out on their 401ks, their pensions, right? Them cutting Medicare, Social Security. We're not even going to get into that factor, but nothing changed his mind to go ahead and change those tariffs. I guarantee, other than the fire fucking sale of the bond market, right? TLT bonds, Treasury bonds, right? 10-year yield, 20 years. they've been trying to get the 10-year yield down. And yield started to spike because China decided, and they don't want to go ahead and tell us, they're claiming that it was some sort of American investor that started to go ahead and do so, right? And even if that was the case, what do they know that we don't? But if China and Japan own the majority of our debt, right, in which they do, a lot of that debt is secured through treasury bonds. If they want to go ahead and start fire selling treasury bonds, and there's not many buyers, well, that sinks it, but it also spikes the yield, right? When the yields rise, this is kind of where I would suggest everybody reads The Big Short, right? It's interesting enough, while all this was happening, prior to this, I was reading the book, right? And I read on what they did with CD swaps and buying insurance basically on the housing market, and how the bond market is basically, that's really what draws the U.S., right? That's what draws every fucking country for that fact. It's not the stock market. The stock market is just a pretty face, right? But the heartbeat is the bond market. So, long story short, I know it's not long story short, but in any case, the way the bond markets work is, let's say, like, let's just use the housing or the '08 crash, right, as an example. So what they basically did at that time is Wall Street got greedy, right? The housing market was exploding. It was one of the best times they could go ahead and make a lot of money, right? And they were being paid basically to go ahead and, say you had $50,000 worth of equity in your home. You would get that call. Yo, you interested in going ahead and refinancing and going ahead and putting that money towards another home? We can go and do such and such, even if your credit was 550, right? So what Wall Street basically did is they found out a way to go ahead and basically make a bond market out of the housing market and allow investors to go ahead and basically invest into that debt, right? Now, this wasn't necessarily the treasury bills, right? Because it wasn't backed by the treasury bills at that point just yet. It was still a private sector. So what Wall Street did is they were basically making billions of dollars a day by what you would call basically selling a put, right? And what that basically means is you're saying that the housing market's never going to fail. It's never failed in history. There wasn't even really realistically a market where you could go and short something like that, right? So there was never any chance of it failing initially. So what they basically did is they said, all the motherfucking, let's just put it like this, right? If you were able to get approved for a house at a 550 credit score, no money down, right, on an ARM loan, which basically is going to give you, say an interest rate, say around that time, say it was maybe 3 or 4% for the first 2 years, right? And then all of a sudden, subject to going whatever their rates were going to be at that time. That rate started to go and spike, right? And so a lot of people ended up coming underwater. As far as the buyers, they had, you're giving people with 550 credit scores $14,000 in salary, and you're allowing them to buy, say, a $400,000 or $790,000 home. You see how the math doesn't work there, right? But Wall Street's so greedy because they're selling puts that basically they're allowing people to buy into the bond market. No one is probably always going to go up. It's never going to go down to their point. So they're just racking up money because it's never actually hitting their strike price. So what basically happens is you go ahead and gain a credit at that point. The credit is basically anything that you put down to go ahead and hold that 100 shares. As long as it doesn't hit your strike, well, you get the credit, right? If it does hit your strike, you just got 100 shares. So, or whatever, how many contracts they're playing with, all right? One contract is 100. So if you're playing options on these shits, or futures, and a lot of them do. So that being said, when they conjoined all the debt, right, into these markets and basically created what we call tranches in order to go ahead and basically contain and bottle up all these particular debts and all these loans, whether it was subprime mortgages with ARM loans or, say, the good loans, right? Say people 700 credit score, 650, something like that, decent enough to go ahead and think that they're not going to default. They're going to do everything they can to go ahead and keep their lifelong investment, the house, right? What they did, though, is they started getting greedy, and they started basically creating pools and these tranches of AAA loans, which are basically the people with the 650, 700, 750, 850 credit scores, right? And they conjoined that and bottled it up with the 550 credit score loans. And they were only taking a conjoined average, right, or a combined average of everything in the pool rather than taking a look at each credit score in the pool. So you had a bunch of 550s in there, and then you started basically having a lot of these companies being over leveraged in the ARM loans, if you will, right? And so at that point, some of these guys figured out, well, you know what, let me go ahead and create a fucking short the market, because all it really takes is for the housing market to start to come down a little bit, right? That's what they're thinking about, because at the end of the day, all these companies are over leveraged on ARM loans with pools of tranches that basically, the credit score might be an average of 625, but how many of them are realistically 550, right? And only being brought up by the 700 credit scores. So the Wall Street guys spot this. They basically started saying, fuck it, I'm going to go ahead and short the bonds, right? As a result, there's a fire sale in bonds eventually, right? People start to go and catch on. As soon as they catch on, that fire sale goes up and interest rate goes up and the bond market's tanking, and of course we get the mass recession. So you fast forward to now, it's a little bit different, right? We're not necessarily talking about the housing, but you're talking about fire sales and treasury bonds, which is historically the safest bond that you can technically invest in because it's backed by the government. It's backed by the U.S. government. The U.S. government's never defaulted, right? But what nobody fails to realize is that the country is built on nothing but debt. We owe nothing but debt to countries like Japan and China and so on and so forth. Because basically we say, you know what, we can go ahead and make good with your investment dollars. We don't want to invest our dollars. You invest your dollars, we're going to make good with them, and then we'll pay it back, whatever the interest is. And we just keep printing money and never really realistically pay or get down the debt, right? But because we have such a mass consumer market, these other countries, they'll go ahead and continue to go ahead and just keep our treasury debt, and that's how they pay themselves back with those bonds. Well, now that we have a trade war, they're saying, well, fuck you. Right? Fuck your money. Fuck all that. If you don't want to go ahead and do that, we'll go ahead and put you in a worse crisis. Sometimes it doesn't matter. If we're not going to get our money back, we'll just go and hurt yours more. Right? So if they start fire selling off the treasury bonds, what ends up happening is your interest rates on your mortgage rates, your car loans, right? Your credit interest, everything goes up. Because these bonds and the treasury bonds at this point are all basically the same kind of tranches, right? It's all the loans of every motherfucking American. Now it's different as far as the AAAs and the triple Bs and all that type of shit, because they've done some things to go ahead and try and manipulate to where that same shit that happened in 08 can't happen again. But there's also some sale wins where they would say, yeah, they really didn't do enough. But in any case, you have a serious fucking problem right now, right? And the stock market, if you saw that mass manipulation the other day, I was sitting there saying to myself, I was pissed because, I liquidated on Monday after I saw a lot of shit. Realistically, I liquidated a lot on Sunday because it was going down massively, right? And I was trying to go and catch the bottom, and some of these were bad, and some of these I was adding. I was like, oh my God, right? I got myself down like hundreds of dollars, so I said, okay, let me see if I can go and keep adding or whatnot. So by the time I got to Monday and I got to break even for some of these, I let go of a share, then, let a couple run. But then it was determined it was fake news as far as the tariffs being on hold on Monday. So I liquidated everything at that point, saying, okay, fuck that. I'm not going to let it sink on me. And it does sink, right? But I'm watching it the next day. And again, like I said, it's not reacting how it should, especially with all the news, and it didn't. Then it does this market mass manipulation. So this is a crazy market. I would tell everybody, if you're an investor, you got to be really careful in these times. I would probably just wait a couple years, to be honest with you, see how the policy all plays out. Even if you end up missing the lows, I don't think you will. Me personally, I think if this year doesn't end red, I definitely think next year will, or vice versa. It will end this year red and probably go ahead and trickle down for the majority of next year, and it'll kind of range at the bottom there before something happens. Either he gets impeached or some catalyst comes and he changes his heart. Whatever the case is, at the point, it's a long way down the road. But right now, to try and buy these dips, yeah, you could go ahead and test the bonds with one share, right? And you got. At some of these, at least on Sunday, you would have got, very good discounts, 30-35% on most of these, right? Which is why I wanted to take it. But he keeps throwing ahead and throwing out these motherfucking home runs, if you will, just tanking the fucking market every single time he talks. So it makes it really hard to hold. I know I've gotten liquidated out of Ethereum a couple of times. Realistically, I could have just played the bounces and took my profits each time and waited for each time to come down, but I got in there, I want to say it was like 13 something at one point. I liquidated that one just to go ahead and get a quick profit because I was like, it's coming back down again off the fucking news, right? Then I got back in at like 14 something. I got a quick profit today. Then I was like, I'm just going to go ahead and keep it, see what happens, right? Got too low again and said, okay, I'm going to get out, and never came back down to where I wanted to get back in entry. So, of course, that happens. But this is the type of shit that he's dealing with, and it's like, man, like I've been doing very, very well on the short side, on the options plays, because I only stick in for so long, right? And realistically, had you been playing puts and I went with my initial thesis that this would be a red year, I've been rich off this motherfucker. But you just never know what's going to happen in this type of volatility on a person that's basically running the market and manipulating it with everything he says. So just be careful out there, man. Scary times.